Good morning, Stéfane.
Hi, Christine.
How are you doing?
I'm good, thank you.
That's good. So I know that this is always a very interesting discussion. You're a very in-demand person, and we have a few of your classic slides to reference during this conversation as we go through your outlook for Canada. And I know you're not going to give me a straight or easy answer to this, but I'm going to ask anyways. Let's start with your view on the Bank of Canada's next interest rate announcement, which is next Wednesday.
You're jumping the gun. I'm not going to answer this now.
Okay, let me set the stage a little bit. So over the past week, we've had a bit of conflicting data here. You know, stronger than expected jobs numbers on Friday, weaker than expected CPI yesterday. You have said that the bank needs to be more aggressive in cutting. If you will, could you tell us what you think the bank will do next week and what you think the bank should do next week?
Okay, so let's run through a couple charts, and I promise
Sure.
I will answer. Give me a couple minutes.
Okay, we're going to start with everyone's favorite topic in Canada, population growth.
And it's not that I want to answer your question. I just want to show you how complicated it is. I'll let people in the room decide what the bank should do.
Yeah.
They may have the same forecast I have. There's no other country in the world where a central bank is facing this dilemma facing population growth. It's the basics of how you determine what your potential GDP would be. Now, in the past 12 months, we've added 1.2 million people. The previous record before that was last year, 1 million, and the prior record before that was 800,000 the year prior. So back to back to back, record population growth. Prior to that, exceeding 600,000 population growth in the entire year, you have to go back to March 31st, 1949 at midnight when Newfoundland joined the Federation. So these are massive numbers. If I put it on the global scales, 3.2% population growth in Canada, number 5 in the world, and the top 20 countries, all the others are located on the African continent. So never before has the Bank of Canada dealt with this type of environment.
And so okay, here's a question for you. Is population growth inflationary or deflationary?
Now you're getting into the interest rate forecast, which is interesting. The Bank of Canada has denied that it was a supply shock, so they thought it was more inflationary. And when you add 3 million Canadians in 3 years, we normally do that over a period of 8 to 10 years. So this type of population surge has meant that rental vacancy rates, home vacancy rates have plunged. Leading to a very interesting, unprecedented dynamic on inflation. No other countries is facing that. And I think you have it on another slide.
Right, so this is another favorite topic in Canada, the cost of housing. Yeah,
so if you look at, as of yesterday's number, clearly population can be inflationary for some components of the CPI. 30% of the CPI is composed of shelter in Canada, and we're running at 5%. So based on that alone, you could say, well, the Bank of Canada, we're facing a demand shock from surging population growth. But we would argue that you have to look beyond this, because if you exclude the shelter component on which the Bank of Canada has no control, we're talking about CPI ex shelter at 0.4% right now. Christine, as of yesterday, we have 6 Canadian provinces where inflation is below 1% or below, and 4 provinces where if you exclude the shelter component, it's actually deflation.
Right.
Now, to your question on the Bank of Canada forecast, are they inflation targeters or not?
Yeah.
Well, if they are, they have to look beyond the shelter component.
And so that's something that the Bank of Canada fairly resolutely said that they would not look through, at least until the end of last year.
Yeah.
Do you think that that was a mistake?
I think they've changed their focus on this, and they've switched from seeing population growth as a demand component on inflation to something where you have to look at the population growth as a potential source of supply, which means you have more excess capacity in your economy. And when population surges, presumably, Christine, when you have monetary policy that is restrictive, well, maybe you need to do some adjustment. And the Bank of Canada last April came out with a very interesting study. They look at 32 labor market indicators, and they say the one that is most correlated with future inflation, is actually the unemployment rate of young men.
Right, and so obviously another huge element related to surging population. This is striking when you look at the unemployment rate for young Canadian men.
Yeah.
It's high, and it really diverges from the similar rate in the U.S.
And again, I don't want to dismiss the impact of women on future inflation, but it's just that, it has to do with the industries that young men work in, and it's not my study, it's the Bank of Canada. So if you don't like the conclusions, you can speak to them. But this is a big deal. So coming back to your question, the initial question, you have CPI ex shelter at 0.4%, and the unemployment rate for young men at the highest level in over a decade. So what do you do at the end of the month? Of course, you cut 50 basis points. And what do you at the following meeting? Of course, you cut another 50 basis points, because we all know that the neutral rate is closer to 3%. You have to get to 3% as quickly as possible.
Where do you think the rate is within a year from now?
Lower.
Lower.
Yeah.
Lower than now.
Well, how low we're going to get below 3% remains to be seen. But the first step is for the BOC, the Bank of Canada, to bring us to 3% now. We needed to be there yesterday. So let's get to it.
Right. Okay. And so your prediction is that the bank will do 50 basis points next week, or that's what you think they should do?
They have to do 50 basis points.
Yeah, and you think that they will?
Yeah. Well, with inflation like this?
Yeah.
With this? Yeah.
Okay. And so based on all of this, where do you see GDP growth going in Canada for the rest of this year and for the rest of
Well,
next
Tom's not
year?
going to like me. There's no way we're going to do 2% next year, so we're going to be at 1.5%.
Yeah.
And monetary policies are restrictive. I don't know how the IMF comes up with this study, but this conclusion, but we're going to go below. We're going to be below 2%. We have to be below potential next year, because monetary policy is not going to be accommodative before the second half of next year.
Okay. When you and I were preparing for this, we did talk about there's some economic upsides to the surge in population.
For certain industries, right?
For certain industries. And I happen to cover the financial industry, so we're going to do a little illustration on that. But can you talk us through this?
Well, when we do market internationally, people ask me, Stéfane, where are the Canadian financial institutions finding the new clients? Well, as it turns out, 81% of the working age population actually borrows from a financial institution in Canada. It's the highest proportion in the world. So when I tell people we get 81% of 3 million people, well, that's a lot of clients, right? So this speaks to where demographic growth has some challenges, but also some opportunities for certain industries. And clearly for financial industries, it's been quite positive, right? And access to banking in Canada is one of the most significant in the world. So 81% of 3 million people, that's a lot.
So, and then the demand from all of the newcomers also fuels industries like the grocery sector, like the telecom industry.
Oh, absolutely.
But those also the rising costs there contribute to inflation. So
But the Canadian supply chain was never designed to accommodate a surge of 3 million people in 3 years. So these were not price gouging. The profit margins at grocer was the same, but you've added an influx of people, and at the same time we had to adapt the supply chain to accommodate this surge in population. Notice also on this chart, the U.S. is only at 65%, and our other North American trading partner, Mexico, is at 11%. So clearly, from a financial institution standpoint, you can understand why financial institutions in Canada outperform their peers with this population surge.
Okay, I would just like it noted for the record that you said the grocers were not price gouging, so I'm sure the grocers would thank you for that one. It's obviously been a big debate as well in Canada. We want to see, you're a bit pessimistic about Canada's growth prospects.
Short term.
Short term.
Yeah.
But where do you see it going long term? Sorry, the productivity issue is a huge topic in Canada. And we're not going to solve that today, but do you see any potential bright sides to productivity in Canada?
I think there is some upside. We haven't been as good as attracting investment as we did for population, or foreign talent are coming to Canada. Now we need to do better in attracting investment, right? And I think going forward, where we do have a few aces up our sleeves in Canada, first of all, I'll start, do we have, what's the next one? I forget what that was. Electricity.
Yes, coming back to...
a reliable source of electricity, which we didn't get in the past half hour here, right? So I think that's a big deal, because Tom was speaking to electricity, but I just want to make clear that Canada's electricity grid is 50% cleaner than the OECD average. So if you're looking for a clean source of energy down the road, or from an ESG standpoint, Canada is really a standout. Our electricity grid is 2 times cleaner than the US grid, 4 times cleaner than China's, 5 times cleaner than India. And by the way, Christine, our electricity costs are 60% below the G7 average for both households and industries, and 20% cheaper than in the US. So if you think about Canada, productivity down the road, this whole AI concept, which is electricity intensive, I can think of no better places to look for electricity. You have to come to Canada. And this is crucial for me because I will determine our future competitiveness and, as you said, reposition us for doing better on the productivity side of things. Absolutely.
So we have some of the pieces there. Obviously, there needs to be some execution around it.
We need to better execute. You're absolutely right.
But your point is we have a clean grid, we have cheap electricity, we're poised to take advantage.
We should be marketing Canada to the rest of the world to say, like, if you want to Canada.
Another factor that you see as an advantage that we were talking about when we were preparing for this, ironically, is government debt. This is not usually seen as an advantage, but and the deficit is a big topic. You know, government spending has been quite steep, particularly since the pandemic. Why do you think why is there an upside or potential upside in Canada's government
This is the other ace up our sleeve, because the IMF came out yesterday with a new study about surging government debt wherever you look. And it's important for Canadian corporations, by the way, this story about net versus gross debt. It's extremely important.
So why is Canada's net debt so low compared to other countries?
The difference between gross debt and net debt is really the financial assets that are owned by the government. And they're not directly owned by the government. There really is a concept. It's the pension funds, right? So Canada decided back in the 1990s that they were going to recapitalize. We were going to recapitalize our pension funds to make sure that they remain solvent for the foreseeable future. And the difference between gross debt and net debt is really the financial assets held mostly by the pension funds.
And so which pension funds are we talking about here? Primarily CPP?
CPP, Caisse de dépôt,
right.
But also OMERS, teachers.
Sure, all the public
Canadian
sector
pension
funds.
Yeah, absolutely. Yeah. And that's a big deal, because you don't have to worry about, you know, Canada being a pay-as-you-go government like certain other governments that we've seen in the G7, where every day you have to issue debt to honor your social security or your social safety net. So we're good, you know, according to latest estimates for the next 70 years at the pension fund level. And that's really important because you have a lack of discipline from governments on spending, be it in the US, most of the G7. So, and the IMF yesterday came out with a study saying, well, the visibility about your so-called fiscal anchors, debt to GDP, they can be off by up to 20% of GDP because of the cycle, which at the same time is exacerbated by an aging population. And then you come up with countries like France, who recently announced that there's going to be a windfall tax on the corporations to make sure that the country is able to stabilize its debt to GDP, because, as you know, France is a pay-as-you-go system. That's why their gross and net debt is pretty much the same level. Every day they issue debt to finance their pension funds, or, you know, public pension funds. So that's a big deal. So from Canada perspective, like, we don't have to bother about that. So yes, we're going to have some uncertainty going forward, but this is so important because it provides corporations with visibility that we're not going to get hit with a windfall tax, and that brings more stability on our ratings. If you consider that, you know, the aging process is taken care of in Canada, not so much elsewhere. So I'm relatively optimistic that with this lack of discipline elsewhere, yeah, we might be negatively impacted on spreads, but not so much, because this is key, I think, to stabilize our ratios down the road.
And so down the road. But in the interim, how do you think Canadian companies should be feeling from a confidence perspective, making fundraising decisions, that kind of thing?
I think the ability to be more credible on stabilizing debt to GDP when you have such a net debt advantage is really important. To me, it's critical. So a reliable electricity grid with some visibility on stabilizing debt to GDP means you're less likely to be surprised by these windfall taxes. They are coming, Christine. They are coming in many G7 countries. So Canada, I think, is better positioned in the medium term to cope with this.
Okay, well, we're ending on an optimistic note, and I did get you to give me your forecast for next week and for the rest of the year, so I'm going to count that as a win. Thank you so much for your time, Stéfane.
Thank you.